Right. Hello, everyone. Welcome to the live show. Here we are again. Another fine live show day. And today I'm actually going to talk a little bit about invalidation areas again. And I'm also going to talk about lot sizes because I had a couple of questions on that, which I thought I'll address. I'll just wait for a few more people to turn up and then we'll get into that a little bit and we'll actually talk a little bit more about that. So how's it, drama? How's it, abstract groups? Great stuff. Welcome, welcome. Glad to see you here. It's good to have you here. So, like I say, I had a subscriber ask me about how to pick up the invalidation area. So I'm going to go through that a little bit today. So the Brent crude oil is doing okay. That's not doing too bad. The euro US dollar is working against us. That's not done so well. And those two trades are on the funded trader account as well. So that's kind of, and it got whacked yesterday. Unfortunately, we got whacked on the US 500 when it spiked down here. It took out the stop loss in an invalidation area, and that got taken out. What else did we have on there? Oh, yes, the Euro Japanese yen, which was such a good trade, also got taken out. So those two trades kind of cost us big time yesterday when they got stopped out it was for me the evening and I wasn't really looking. So yeah, that's interesting. Brent, a moment ago it was like double the price. I don't know, Brent's driving me crazy. It's like up and down here. But what interested me was these large red candles here, huge red candles. So, and also it seems to be in a bit of it's in a fair value gap, and it's also heading up towards this supply area here. Worst case scenario, hits the supply area, comes down. Unless it carries on going down from here, which would be absolutely marvelous, of course. That would be great. How's it, Roy? Greetings, man. Welcome. How's it, Elaine? Good to see you back every time. One fantastic couple of regulars. That's what we need. Regular people on the show, man. So as I said, yeah, we are going to talk about the invalidation areas today because of the questions I had. The lot sizes, how to calculate a lot size, I've gone over it before, and I have now made a video about it, which has either already come out or is still coming out. Let's actually check. I'm not sure. I'm not sure if it's come out already or if it's still coming out, but the lot sizes, I have made a video for you guys on how to calculate your lot sizes and the best way to go about it. But it does also fit in with invalidation. So just keep that in mind, that it all fits in together, because the way we calculate our invalidation is the way we calculate our lot sizes as well. So that's important. That's always quite important. How's it, Stephen? Welcome, man. Good to have you back. It's good to see you all here. Morning, Louis. Welcome. That's good to have you here. So here we go. So there's a few of us on board. Not many. I see these guys who do the scalping and the 5-minute charts, and they make it look all pretty and tell you can make $1 million in a day, get thousands of viewers at any one time. I suppose people like me don't. People that tell you we actually lose trades. These things happen. We actually take losing trades. Can you believe it? And we don't make $1 million in a day. Oh, no, we're not that popular. That's not what you want to hear. But yeah, no, like I say, yesterday we took quite a big whack on the US 500 and the Euro Japanese yen. That also hurt the funded trader account again. So I've got to fix that, obviously. That's my job. And that's what we'll do. We'll fix it. Brent crude, okay, that's landed in profit, and the Euro US dollar is in a loss again. But that'll come right, I think. I believe the Euro US dollar will hopefully make a continuation to the downside. And if it doesn't, another one down. We'll see how that goes. See, that's the truth of trading. It's 50-50. You never really know. Now, what happened to the US 500 trade? We had a nice long trade, and I was hoping it would play out in the flag, but whatever was said yesterday caused it to spike down and obviously take out the invalidation area. That was unfortunate, but I couldn't put the invalidation below this main support. It was just too far away. And the way I saw it was if it broke the flag pattern, the trade was kind of invalid anyway. And it just looks to be kind of falling over now. That said, from here, it could still shoot the lights out because these things still seem to be quite long. Most of them, they all appear to be very bullish still. Look at the DAX. Look where the DAX is. The DAX has bounced off its trend support again, heading off on the long trade. And I was actually looking at a long trade this morning. Didn't take it, missed out. I should have actually taken that trade. Would have been quite a decent trade. But I just thought, we're kind of hitting a point now where this is just really getting to a point where it just seems so high. Like I said, I still believe the US 500, the guys are going to push for that 6,000. I don't know. But we have to see what happens because, there's a lot of geopolitics in the world and that sort of thing going on at the moment as well. So before I get to these invalidation areas and lot sizes and things, I'm just waiting for a few more people to turn up. And then we'll talk about that because, like I say, it's not the first time I've had this question where people are struggling as to where to put their invalidation, their stop. Where do I put it? How do I put it? How do I calculate it? And that sort of thing. Oh yes, gold. Yeah, love gold. Going long, still going long. I actually wanted to get back in and take another long trade, but I was very cautious and I was waiting for it to get back down to these levels down here. And obviously it didn't go very far down before it turned around and went back up again. So look, a lot of people are saying that's enough, we're calling it short, but I don't have a supermarket mentality. My mentality in the stock market is completely opposite to the supermarket mentality, and that is if something's expensive, it's good, and if something's cheap, it's bad. That's how it works in the stock market. So gold is on a run at the moment. It's on a strong bullish run. So it doesn't mean it's going to stop. The only time that gold has changed its mind is when it breaks the structure. When it breaks back down the structure, then you can say, all right, gold is out of there. Now look where the trend resistance is and where the trend support is on the day. And even if you were to take one on the 4 hour, not even close. It hasn't broken structure. So gold is seriously bullish, and it's still bullish. It hasn't changed at all. And I'm not going to change my mind because of some news events or because of the way that the guys are talking about the inflation and things like that. News events will drive you insane. And the guys all seem to think they're right, but it's got nothing to do with that at the end of the day. It's just knee-jerk reactions, as we call them. Somebody says something and it goes down that way. That's where you get your corrections from. So I thought it would correct a little bit more. It didn't. So I haven't got in. And I've probably missed out. But we'll see. Maybe it'll correct down still. I'm hoping it'll get down to this sort of level down here at the 2670, 2680 level. That would be great because that might be a good long trade to go long again. Because this thing's been going up for a long time, Ellie. Hey, David, if you're trailing your stop loss, don't put it too close. That's the big thing. And that's what we're going to talk about today, the invalidation areas. As I say, I had a question about it, so we are going to go into detail on that, David. I'm going to speak about it in a few minutes. In a couple of minutes, I'm going to go into the invalidation, the trailing stop, and how you trail it and the best way to trail it. Because I noticed a couple of guys asking the same question, and maybe I haven't been clear enough on it in the past. Maybe I have, and you guys just haven't seen. But at the end of the day, it's all about, you don't want to take your stop too close until you're really close to profit. When you're close to where you want your profit to be, then you can put your trailing stop as close as you want to because it's not going to hurt you if you get taken out. But if you're still trying to make a profit, you don't really want to be putting your invalidation, your stop loss really that close because you haven't really made the profit yet. But we'll get to that. We'll go through it in a moment. How's it, Peter? Welcome. Good to have you on board. So what I'll do is I'll start talking about invalidation in a moment. Let's see, what product shall we choose for invalidation? This US 500 was probably a pretty good example because we got stopped out here. US jobless claims 227. Okay, yeah, that's fine. All right. News items again. The news. We love the news. Okay, we do actually have a trade in Brent. So let's use this. Excuse all the lines, guys. I could take them out, I suppose. Doesn't matter. Okay, so many lines on this little chart. Too many, actually. But what I've got in here on this Brent crude oil is my daily trend resistance, my daily trend support, but I've also added in a daily support level, which I've drawn in the bottom here, and this is a supply of money over here. What this is a supply on the 4-hour chart. What I do is I'll take my levels from the day, I'll bring it to the 4-hour, and I'll just have a look if there's anything else. And this level is on the 4-hour. And then this level I just drew in on the 4-hour because I saw this sort of 4-hour trend here, and it kind of fits into the what you would call a fair value gap. Now, I don't play into all this ICT stuff and all that sort of thing and all the fair value gaps and all that personally, but they are interesting to have around as confluence. But be careful of confusing it and confusing yourself, because that's also not a great idea. How's it, Kokoro? Welcome back. GPB Aussie dollar. Well, I can tell you what, the Aussie dollar, US dollar is going down. The GPB US dollar is going down. The GPB Aussie dollar, we can have a look at that. We can have a look at it. Definitely we'll have a look at it in a moment. We'll take a little look at the GPB Aussie dollar. Maybe we should do that now before we start. Let's do that before we start, and then it's out of the way. What are you seeing, Stephen? Is there something here that what's your question on it? Let's say. Let's have a look at what we've got. See if there's anything interesting here. You know what I'm seeing here? It's slightly bullish, not much. There is a resistance here. Okay, let's see on the day. There is a support down here. Yeah, definitely. There's a support. Trading in a range, this thing, man. Actually, if you look at it, it's trading in a range. It's not really in a bullish phase or a bearish phase. It's really trading in a range on the day. On the day chart, that's sitting in a range. It's not going anywhere. You could take the range a bit further down or a bit higher up. That's a couple of spikes. You can trade this in a range effectively. So what you're looking at with the Great British Pound Aussie dollar is you trade it short off the 196.500 and you're trading it long off the 192. That's it. Yes, I short on that at 9 a.m. yesterday on the 4-hour. I grazed my take profit and went back up and took me to break even. Do you think I'll go back down or follow the trend up? Okay, so you got in at this level, which is okay because there is a bit of a trend there. And now it's going back up. This will most probably hit here and continue on down. Worst case scenario, it's going to go to the main resistance. The problem you've got here, Stephen, is this is kind of in the middle of the range. So, and it was heading towards the upside and it wanted to go into that resistance level. So it's difficult to say, but you know, if I look at the little trend coming down here, very, very slight break towards the downside, then it might just hit that and continue on to the downside. I don't see any large, well, there was a couple of large red bars there, large red bar there. You could say it's 50-50, but there is a chance that it'll turn around and go back down again. So you're not in big trouble. Yeah, if you stay within the range, Stephen, if you're able to put, say, a stop loss, you know, up here and a take profit down here, you're actually okay in this range. But like I say, it is in the range. This looked like it could have been a head and shoulders developing, but it didn't play out. It broke the head and shoulders. So the head and shoulders is no longer valid. It's actually broken. So that's unfortunate there. But yeah, it might still turn around and come back down. Just keep an eye on that. Anyway, so invalidation rules. Let's get back to that. We wanted to talk about that. No, I get that, Stephen. I understand that you probably had a bit of a tighter stop loss. I mean, I probably would have as well if I took that trade. It's just that it's kind of in a precarious position because it's in the middle of the range. So it's very difficult to say, oh, it's going this way or it's going that way as it stands at the moment. It's weighting towards the downside, but then it's also got weight towards the upside because it was heading in that direction in the first place. So it makes it complicated, but it could turn around and go back down again. It's a bit like this Brent crude oil trade that we took, which looked great on the short side, and now it wants to go all the way back up again, and it keeps on doing that. And, where's it going to go? It's, it is actually, if you look at it, in its range, but I was looking at the interim sort of downside with a view to it reaching its, its level down here, coming back all the way down. But we shall see. We shall see how that goes because there is money lying at the supply level. Even if it gets all the way back up to that, it should still push it back down again. Now, the reason I want to talk about the invalidation areas is because that gentleman did ask me, and he said, how can I place an invalidation area? So, if you want to place a stop loss, you want to place an invalidation, you don't do it by ways and means of a certain amount of points and say, those are my stop losses and that's that. You do it in monetary value. You want a $1,000 stop loss, okay? So the best way to do it is to look at the area where you feel if my trade hits that area, this trade is done. There's just no way back for it. It's definitely carrying on long. In this case, I chose this area just above those highs, which is a little bit close to those highs, but it is far away from this supply area. Because my feeling is if this trade breaks through that supply area, the money's gone, the trade's gone, and it's out of there. Same thing as what happened to me in the US 500. I had my stop loss somewhere down here at the 57.90 level, because my feeling was if it broke out of the flag, it was done, it was over. I was wrong because it bounced off the main support, and I never expected it to fly so far down so quickly, but it did. It took me out, went back up. So sometimes you can be wrong, but what you got to do is look at an area where you just feel that, listen, that's the area where I feel my trade's not going to work out. And then what you got to do is work out from your cost to that area how many contracts you can take to give you $1,000 loss or a $200 loss or whatever your stop loss is. My case on this particular one, let's say it's $1,000. On this particular one, it was $200. Should be 250 if I'm not mistaken, or 200, somewhere around there. But that's what we do there. It doesn't show it on this thing, okay, because it's a $25,000 account. So that's why we look at $250 on the Brent. On this one, we're looking at a different level. So each and every trade taken on this one would be 1,000. Okay, so there's the euro, US dollar, 1,000. So Brent, 1,000. Okay, so now you work out that distance. You first work out where you want your stop loss. The first thing you work out is where's the invalidation? Where am I going to put the stop loss? Okay. The second is how much is $1,000 in loss. Then you work out the size of your contracts. So the size of your contracts are based on that distance. Then you make sure that your take profit is reasonable. Like in this case, this is probably a 2-to-1. Sometimes it's 1.5-to-1. Sometimes it's 3-to-1. As long as it's more than what you're losing. Always make more on your wins and less on your losses. If it's a 1.5-to-1, even if it's a 1-to-1, you can always add to the trade as you're going if you need to. Now the question arises, now what do I do with that stop loss, so that I don't get taken out every time too quickly? And the whole point is this. You don't move the stop loss until this profit level is at a similar level to the stop loss in value. So, or points, whichever way you want to trade. Some people prefer to use just the points or pips or whatever the case because they don't want to see the monetary value because it's heart-wrenching. But I get that. But I prefer to work with the monetary value because I can see what's going on. It's more rounded. And, sometimes, for example, different currency pairs will have different value. So I'd rather see the monetary value for myself. Now, then what you do is you wait for this to get close to $1,000 in profit down here. Even if it's $800 in profit, that's great. At $500, I'll actually move this to cost. So at 50% towards my profit, or just over 50% towards my profit target, or of the stop loss, I'll move the stop loss to cost, making my trade free. If it comes back and takes your stop loss out when you're 50% of the way in profit, it's really the trade is turning against you. I mean, if we are $500 in profit here, okay, and we move the stop loss to cost, and this thing turns around and goes back and takes us out, let's be perfectly honest, this thing has actually turned against us. So 50% of your stop loss is in profit, move it to cost. When it goes up to the full $1,000, when it's down here somewhere and it's $1,000 in profit, then trail your stop loss up, put about $500 behind. Keep it $500 behind, because now you're $500 in profit. So you're making a bit of a profit at the end of the day. And geez, this guy at the guest house behind me is now doing all kinds of things with his garden, and he's making a hell of a noise. I hope you guys can't hear it, with his tools and his blowers and his lawnmowers and I don't know. But anyway, I've got the guests tonight. That's even worse. These guys can't behave themselves. So I tell you what, it's annoying like you cannot believe. But anyway, that said, I live by the coast, so what can you do, eh? You're going to put up with the Airbnbs and the guests and all the rest of it around you, so there's not much you can do about it. Anyway, so to get back on the subject of, okay, so now you're $500 in profit if your stop loss gets taken out. And at least you're taking a reasonable profit if your stop gets taken out. And also, once again, I say to you, if you're $1,000 in profit and this thing goes back $500 and takes you out, the trade is turning against you again. So just take the profit and be happy with it. What you're actually hoping for in a trade like this is that it goes all the way down to the target. Now, if it gets down to the target, then at least it will be, you can bring the stop loss down a hell of a lot closer. I would bring it down to $100 or $200 behind, because now I'm at target. And I mean, most people will just click the target and take the money. No, I'll move the target away a little bit, and I'll be like $100, $200 behind that. And I'll be happy to take the 1,800, 1,900 and walk away. If it takes me out quickly, then I'm okay, because I'm really at target. But if it continues on going and I can put my stop loss past the target, that's fantastic. That's absolutely phenomenal if that happens. Seldom happens, but when it does, it's a bus ride. So that's how you got to place your invalidation areas. Look for an area where you know the trade's invalid. You would never take a short trade if that thing is sitting there, not unless it gets up to the higher levels. Then you would look at maybe taking a short trade. So no, you wouldn't take a trade there. So in that scenario, you're kind of looking at, that's invalid. That trade would never work anymore. So that's where you put your stop loss. End of story. Invalidation, period. Lot size, like I say, you calculate the lot size based on the amount you want to lose per trade, which is 1% of the account. So let's say it's $1,000. So you want to lose maximum $1,000. That's what you're going to pay for the trade. And you've got to look at your trades as, that's what I paid for the trade. That's it. I'm paying that for the trade. And I expect that I'm going to lose that. And I'm going to walk away from that. And that's just how it is. And if it goes into profit and you can move the stop loss to cost, for me, that's a bonus, because now my trade is completely free. And if it goes even further in and I can make a profit out of the trade, that's an even bigger bonus. And that's how you must look at your trading psychologically. Because if you're only looking at this and that happens, it's soul destroying, let's say. It hurts. Okay. So I've had it. Kokoro says, I've had a red morning, so I'd like to see oil tank through my take profit. It's a little optimistic at 69.42. Stop loss at key level 71.82 or 85 ticks. 71.80. Okay, you're on a different oil to me. Yeah, all right, I'm on Brent here. All right, you're probably on WTI or something like that, but similar scenario. You see where my stop loss is. If you're on oil, you'll have a similar picture to this, whichever product you're on. So yours might be showing a different price level because it's WTI or something like that, or NYMEX or one of the others. But yeah, similar scenario. If you've got your supply of money there and your stop losses behind it, that's great. A bit of a red morning. I don't know when you got in. Maybe you got in a bit late. Mine's up here at this level of. I got in too early as well. 75.28. It's okay. I should have got in a bit earlier than that, but still, it's still heading down in the right direction at the moment, and we shall see what happens. But the stop, I mean, the take profit. You're not optimistic. My take profit, optimistic take profit is 70. So, but I don't worry too much about the take profit as much as I worry about the stop loss. The take profit that's my optimistic. That's what I want. But you must remember, I'm not going to wait for it to take profit. I'm going to start moving my stop loss down when I'm in profit. When I'm 50% of the way in on my stop loss amount, I'm going to start moving my stop loss down. And then if I can get a profit out of that, that's marvelous. I move my stop loss into profit every 1-to-1. Yeah, that's great. Like I say, you can move it in when it's 50% of the way in. If this goes, like this is $1,000 loss. So if this goes $500 in profit, I'll move it to cost. I'm happy with that. And then if it moves $1,000 into profit, I'll move that $500 into profit. But I'll always keep it then, those $500 behind, so that it's got some space, and then it can keep on going. And that way, if it does take you out, there's no loss at the end of the day. Light crude oil futures. Yeah, no, Kokoro, it's just, I think that's NYMEX, if I'm not mistaken. It's just different products. For me, I only need one oil product to look at. I just prefer the Brent. I know the pricing. They're all the same at the end of the day. If you put WTI and you put NYMEX, put all them all here, they're all going to look the same, just different prices. The pattern is going to be the same. So you only need to trade one of whichever one. So if that's your favorite one, just trade that. It's exactly the same. Okay. David, welcome. Afternoon. Glad to see you here. That's good stuff. All right, so we've gone through the invalidation areas. We've kind of gone through the lot size, which is what I wanted to talk about. So I think that will answer the subscribers' question that they had with regards to invalidation and stop loss and that. So they actually asked me if I could make a video about it. I did make a video for you guys on lot sizes, and I'm pretty sure I've made one about stop loss as well somewhere out there. But now this week I made one about lot sizes, so that is scheduled or it's already out or whatever, I'm not sure. Okay, so that should be fine. Then the big thing is, don't add to the losers. Now, this is still a problem. This is still a big issue where a lot of traders are saying that you can add to the losers and you'll win and it'll be fine and everything will be okay because what goes up must come down and you'll be fine. And like I say, every time I've seen that scenario, it's always ended in tears. It's never come out with a great result at the end of the day. Somewhere down the line, it always goes wrong. So if you look at a trade like this trade where it's ranging, yeah, sure. I mean, you'll be fine as it stands at the moment. But then the only question I'm going to ask you is, what are you going to do in that scenario? What are you going to do in this scenario if you're hedging your losing trades? How are you going to get out of that mess, right? If you were long. Let's say you took a long trade there based on what they call the martingale effect, or the hedging, or I'm losing and I'm going to just average out my losing trade. What are you going to do to get out of this? There's no way out, right? So on all these guys that are telling you that you can just add to the loser, add to the loser, add to the loser, it'll come back. and you'll make a profit. How much money do you think you're going to need to get out of this? This is not just going to come out of this. I mean, you're going to have to start extremely light, almost like with nothing, with the expectancy that you're going to lose to stay in this trade. So that's why I say to you guys, it always ends in tears. You're going to add to it here, 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 you're going to just keep on adding on a losing trade. And at a point, there's a point where you're going to turn around and say, I can't keep adding to this. I just can't. I've run out of money. I can't keep adding to this anymore. And the minute you get out of the trade and you say, well, I'll just stop loss it now, it'll turn around and do exactly the opposite. You know, trends are your friend, but if you don't play the game right, they can be your enemy. The market will keep on moving longer than you can stay liquid. Let me tell you that right now. If you think you can out-liquid the market, you've got big worries. So that's why I emphasize stop loss and invalidation areas. It's so important to understand this because so many people have not experienced this. I've seen it over and over and over. This is not the first time that I see long charts. It's not the first time, and I've seen many a market crash. And like I say, don't think that you are going to be more liquid than the market. I've seen guys go bankrupt very quickly. Believe me, I've lost tons of money in my time, and I've made tons of money in my time. But I've had those moments, and they're difficult to get over. It feels like you've been mugged. It really doesn't feel good to take massive losses. So be very, very careful, guys. I've experienced this in the past when I was younger and I was stupid and I didn't understand what I was doing and I thought I was super clever and I thought I could hedge markets down. And I learned the lesson just the same as many other people learn the lesson as they go on in life. So take your stop loss, walk away. The best way you can trade in life is to decide, listen, my stop loss is $1,000. That's it. That's how much I'm prepared to lose. And if it gets to that, it's gone. It walks away. And then you know how much you've paid for the trade. And you just move on to the next trade. I mean, for example, yesterday we got taken out of, was it Euro, Japanese yen, and the US 500. Somebody asked me here about the US 500, so let's go there. US 500, here we are. Okay. Okay, more news on the side there. So, this US 500. Now, the most disappointing thing that can happen to you in the market is when your stop loss gets taken out and then it turns around and goes the way you want it to in the first place. For example, with this US 500, that's a really, really good example of that. So my stop loss was here, got taken out. I wake up this morning and I would have been okay. And you think to yourself, it spiked me out of the trade. Those are the worst feelings. Those are actually worse than losing because you feel like you should still be in the trade. But the point of the psychology is to be able to take that and walk away and say, do you know what? I'll take a fresh trade. I'll look at a new trade. And let it go. Let it go behind you. Because the flip side of that trade is the other trade, the Euro Japanese yen, which had a stop loss at invalidation around here, and it flew all the way up there, and it could have got so much worse. Now, you might say, but Rob, it's coming back to your stop loss now. Look at that. It's coming back to where your stop loss was. Yes, it is. But look at what that is. That is what was resistance. It broke through the resistance, shot up, took the stop loss out, moved on through the invalidation. We didn't lose anything from there. We just lost our stop loss. And now it's coming back to take the money and carry on along. It's not going to go through that and go against us. So these ones actually make you feel good because you didn't lose big time. You only lost your stop loss. So that one played out. But the other ones sometimes don't play out and you feel kind of like wow, I could have still been in a trade. Now, the worst thing you can do with this trade is to quickly buy back in again because you feel like you should still be in the trade. No, you don't do that. What you've got to do is look at the picture and say, well, do I actually want to trade here right now? And had I been at this point, yes, but because it's all the way here, I'm thinking, no, I'll wait a bit, wait for it to correct again and see what happens. So, you've got to take a step back when these things occur. The US 500, for that person who asked, then you remain long on the US 500. We are using these guys, which is funded trader markets. Lolo, you asked which prop firms are you using? Funded trader markets. Look, if you don't know me, a lot of the guys here know me. I don't normally trade a funded trader account. I trade with real money. I opened this account because there's a link to this, by the way, if you want to go and have a look at them and whatnot. There's a link in the description. But the main reason I opened the funded trader account was because I got so many questions saying that you wouldn't be able to trade a funded trader account with my system or with price action or whatever the case. And that's completely wrong. So I just wanted to open the account to show you that you can trade an account like this with price action, and you can actually keep it alive and keep it going, and probably in the long run get it approved. It's still in the phase 1, actually. I haven't even gotten to phase 2 because I'm not that risky with it, and I'm going to try and push it up. But yeah, they're actually quite good because they allow you to trade overnight. They allow you to keep trades over weekends. Their rules aren't that strict. Their consistency rules are not that strict. And also, the latest thing they've come up with is you can now have okay, these are evaluation accounts, but you can now have what do you call it, account, what do you call it now? You can have a live account immediately. If you pay a certain amount, you don't have to go through the evaluations. You can literally buy a live account of these guys. I'm just not sure where it is here, but they advertised it to me on an email the other day. Said you can literally buy a live account, and you don't have to go through these demo evaluations because that's what this is. This is an evaluation account. Like I say, I only opened it to see if it would work with our system, and it does seem to be able to in the long run. The difficulty is, for example, with real money, you can take 10 trades and you can take a 10% risk on your account, and you're not concerned about it. But you can't really do it with a funded account because they have drawdown rules per day. Now, the overall rule is like 6 or 8%, I don't remember. And the daily rule is like 4%. So if you had 10 trades and a lot of them lost, then your account would get shut down. So that holds you back a little bit. So I found that a little bit difficult to work around with the funded trader account. I found it difficult to work with, but I'm not too worried about it, and it's not something that's concerning me because that's not where it all comes from at the end of the day. Instant funding is the word I was looking for. You, thanks. Totally. That's, yeah, you mean instant funding. Yeah. I am using step 1. Yeah, totally. That is step 1. That's step 1. That is phase 1. Phase 1. That's it. Okay, so yeah, top step also does instant accounts. So these guys are now doing instant accounts as well. Funded trader markets. And their rules are not as tight as some of the other guys as well. There's a lot of controversy around funded trader accounts, with guys that are paying and not paying, and guys that are trying to rip them off, and then all these stories and excuses and things going on the internet that I just don't quite understand. I was actually quite amazed in the first place after they started to come out with this sort of thing, that you can actually get funded these days. I always used to think, wouldn't it be great if you could? But I still prefer using your own money. I still think it's a better deal and more trustworthy deal. But yeah, that's up to you at the end of the day. And it does help, for guys that don't have huge amounts of funding available, to be able to have these funded trader accounts available. But what I find a big problem with these funded trader accounts is, for example, for me now, I open this funded trader account and it doesn't really matter to me. I'm not desperate to make it work. I just want to play around with it and see what it does and see how it goes. So I haven't even moved it on to phase 2 yet. It's like, it's actually in a loss at the moment. And I'm not too worried about it. I'm checking how it works and what nice things it's got. It seems they listened to me when I said that this match trader program needed some charting, drawing availability, and it's now included trading view on it. So that's great. So it's got charting capabilities. You can get C Trader with it as well. But yeah, like I say, it's not as important to me as it is to a person who might be desperate to make an income. So for example, when a person starts to become desperate to make an income fast, then it becomes a problem because they can't start taking mega risk. They start searching for trades that are not there. Like I say, the market should come to you. Don't go to the market. And then you start to lose money big time. You start to throw the money down the toilet. Start to trade on 5-minute charts with the hopes that you're going to make money. And you take 99% of traders lose there if you don't know. And then it starts to go pear-shaped very, very fast. So that's the downside I see to funded trading. And that's how they make their profits, I'm sure, is they get people sucked into buying the funded trader accounts, and they really, really need to be successful. They really, really need that income. And then they overtrade. They try and trade their way out of trouble, and they lose their accounts over and over and over again. Whereas if you don't need that profit immediately, and if you want to learn and you're a little bit patient, then you'll keep the account open a lot longer, and you'll get more benefit from it. No, the max drawdown depends from company to company. So you say the max drawdown is actually your trade in capital. Am I wrong? Yes, you're wrong. The max drawdown depends from product to product, in fact. So in other words, it depends which product you choose in some cases, and in other cases, it depends which company you use. So now for these guys, for this particular, this was a 25K account, right? So the first target is 10% profit. The overall drawdown, so the overall account is 6%. So 6% of this overall account, right? And then the max daily drawdown is 4%. So you can only lose 4% of your account in one day, which is about $1,000, right? And that's how it works. End of story. There are other accounts which offer different max overall drawdowns and max dailies. For example, if you have a live account, immediate live account, they immediately change that to 5% and so on and so on. So be aware of that if you do go into that sort of thing. Okay, be aware of that. Be very careful of that. That's why these profits are so small here, is because, okay, they haven't gone anywhere, let's be honest, but it's only a smaller account, so you can only take smaller trades on that account. How is Brent doing? Oh, we're still in profit at least. Okay, there we go. Right, so no, okay, so all right, you can use 1% from a 10K account because you have a drawdown of 6%. You can use the 1%, but you can't take 10 trades. So that's where I've figured out with these funded accounts, I can only take 1, 2, 3, maybe 4 trades. Okay, and then on 4 trades I'm risking, because on this account, okay, it's supposed to be a $25,000 account, I'll take $250 risk on each trade. So only $250, okay? But if I take 4 trades and all 4 of them lose, I could be in trouble. So I take 2 or 3 trades, and that's it. And if they lose, so be it. If they win, so be it. And that's why this account is struggling to pass or get ahead. It's because I can't take like 5, 6, 7 trades. I can only take 2 or 3 trades at a time because of that maximum drawdown. Because I take a 1% risk on each and every trade, which effectively allows me the window of maybe 3 trades. I can risk for at a risk, but then I got to watch it. If I'm not watching it, 3 trades, that's it. So you do have to be careful of that. But the overall drawdown is fine. It's the daily drawdown that is the pain. Whereas with a normal account, you could take 10 trades and risk 10% of your account, and you'd be fine. Because if you've got a $100,000 account and you risk 10 trades at 1% per trade, your max loss is $10,000, which is 10% of the account. And 10% risk is okay in my book for your own money. So that's where the trick comes in with the funded trader accounts. Is it's very difficult to have a lot of trades open at a 1% risk, and I mean, you really need to have, and this one's got 1% risk on it, and you can see it's really struggling to make any dosh. So that's where the trick comes in, and where the manipulation comes in. How's it, Daniel? How's it going, man? Good to see you again. So yeah, so if you've got a max drawdown, your max drawdown 6%. So, but that's for your overall account. Your max drawdown per day is 4%. So it's like, in your case, it's not even $1,000. What's 4%? Like, ooh, it's about $400 or something. So just be careful on that. Be very careful. Yeah, Stephen, I hear you. You can have 0.5% and have 10 trades. I get that. You could do that, I suppose. They're going to be really small trades. If you can, just be careful, because some of these products, like, some of them won't allow you that smaller trade. Some of them will be like, no, the trade's too small, you can't take it. So just be careful of that. I think 1% is about it. It's difficult to even get a sizing on a 1% trade on a small account, because on this account you might still be able to do it on a 25K. On a 10K, I think you're really cutting it fine on 0.5%. I don't know if you're going to get a trade that small, but yeah, you can try and see how it goes. But why not? There's nothing wrong with that. There's no rule that says it has to be 1%. There's no rule that says it has to be 2%. You can go for it. It'll work. It'll actually work. So 0.5%, you could maybe have, but even then, you could have about 6 trades, not 10. You could have about 6 trades, maybe 6, because your daily drawdown is 4%, not 6%, 4%. 6% is max overall drawdown for the whole account. Daily is 4%. So that's your thing. But just be careful of that. Okay, they do have consistency scores. Yeah, okay, don't worry about it. Okay, so where are we here? All right, what were we talking about? Oh, yes, talking about funded trader accounts again. They amuse me, funded trader accounts, they really do. But yeah, I do understand that people need it. That's why we are here. And look, I did leave a link for you guys if you want to get in here. They got loads of specials and discounts. And yeah, okay, great stuff. It's up to you. Definitely not up to me which way you go. And not everybody has got billions lying around, so I get that. On my personal account, I use a similar rule, okay? Now, don't get me wrong, this is not my personal account. This is TradingView. My personal account's on MT5, and you are never going to see my personal account because I do not post my bank accounts online. Anyway, especially what happened. You saw what happened on the Discord channel. They someone copied the image and copied the name and started trying to scam all you guys with my name. It's ridiculous, to be quite honest with you. So, yeah, no, I'm not putting that account up here. But okay, I use the same principle, and that is 1% of my account per trade. All right, but I don't put all my money in a trading account. I put like 100,000, okay, and if I make a profit, I take it out. So I keep my risk at basically what I'm showing you here, basically $1,000 per trade, and then I'll take 20 trades. I'll risk 20% of the account because I know that the market's 50-50, and there's a good chance I'll win 5 and lose. I mean, lose 10 and win 10, and I should be able to make more on the 10 that I win than the 10 that I lose. So if I can take 20 trades, I will. But do you know how difficult it is to take 20 trades? It's not easy to take 20 trades, guys. Even 10 trades, it's difficult to take. So I'll normally have 7, 8 trades, 9 trades open at any one time if I can. Sometimes 6, sometimes 2. It really, there's no rule. But like I say, you get those days when you can, you get those days when you can't. So like I say, some of the trades will go up, some of the trades will go down. And I use the same risk principles, 1%. And I prefer 10% of the overall account, but I am prepared to rest 20% of the account because not all my money is in the account, so it's fine. Okay, I know some prop firms raise eyebrows if you go about 4% or higher on trades. Yeah, no, they worry about it to try and keep you from payout, even if you're consistent. Yeah, Stephen, you're right. You know, these guys are. You know, I've often wondered how they're making their dosh, and I haven't really gone into it in depth, but I know a lot of guys that have complained and a lot of guys who have not been that successful with prop firms, and I don't want to talk bad about any of them, but there's 1 or 2 names out there that have been brought up that have been of concern, so just be careful. But yeah, I mean, at the end of the day, it's really cheap to get in, okay? It's not expensive to get into these things. I mean, if you look at these with their discounts, so you pay $100 to get into a 25K account or $170 to get a 50K account, right? And if you lose it, that's I mean, you could lose that on a cash trade in a flash. So it's not a lot of money. So you can take the risk, get an account, and then as soon as possible, try and get a withdrawal out of them so you can pay for the account, if you get my point. And then you're risk free, similar to trading. That's my point, you know. Like, try and get the money back out of them as soon as you can, and then you're risk free, and then you know you've paid for the account. My criteria for a prop firm, and if this is what you're looking for, firstly, they've got to allow me to trade my own way. I don't want any rules about how I trade, when I trade, and what time I trade. So they've got to allow me to trade any time of the day. They've got to allow me to keep my trades overnight. They've got to allow me to keep my trades over the weekend if I so prefer to do so. And I will be allowed to trade my own way. And that's about it as far as I am concerned. As well as the fact, I do like to know that they pay out and get some information from other people. That do they pay out or not, or are they reasonable? So these guys do, as far as I know, pay out, and they don't. And I've spoken to 1 or 2 other guys there, and they seem to be decent. But yeah, the big thing is that they allow you to trade your own way. They allow you to trade with your own style of trading. There's a lot of these prop firms that demand that you trade a certain way, a certain time of the day, that you have to trade out at a certain time of the day. You're not allowed to hold the weekends. You're not allowed to trade during the news and all that sort of thing. These guys do allow you to trade through news events as well, just by the way. So you don't have to, you know, worry about things like that. So this prop firm, this prop, what am I talking about? This prop firm has been very relaxed. And that's why I quite enjoy them, because they haven't put down specific rules about when I cannot trade. So that's fine by me. That's okay. And the consistency rule doesn't bother me too much, because generally I am pretty consistent. I don't have way out there trades and not way out there trades. I pretty much stick to a rule and my system. So I'll be happy with that, I'm pretty sure, at the end of the day. So that's my criteria for a prop firm. Yes, that's, if you're asking that, that's definitely my criteria. Don't go jumping into these guys that give you just too many rules. And too many rules are also a red flag for me, because that tells me they don't really want to pay. They don't really want to give me the money. The too many rules means, yeah, we're just trying to stop you from being successful. So just watch out for that as well. You all know what I'm talking about when it comes to that. So the FTSE, we haven't looked at the FTSE today. Still in its range, and it hasn't left its range. I don't think the FTSE will ever leave its range. It's going to stay in the range forever. Yeah, that's what we think sometimes when we look at these things. But it used to trade in a range down here in the 7s. Now it's trading in a range up here in the 8s. So that's great. But the FTSE's always liked to trade in a range for a long time. No matter where it is in the market, no matter where we are in the market, the FTSE will always find a way to trade in a range. It's all you guys who live in the UK eating fish and chips that keep it in a range. Technology stocks rise. Not according to this. It kind of looks like it's losing to me. But anyway, that's fine. I wanted to buy some more NVIDIA this month, and it actually looks like a good buy. Okay, let's actually check that out. Check it out for myself and see. DAX still going well, still going long. Happy with that. That's actually quite good. The SA top 40, surprisingly enough, is still long. It's not too bad. How's gold doing? Still long, still going mad. Has not changed its mind. And some of you guys were in the US dollar, Japanese yen. You guys were long, right? And yeah, I would say it's still going long, actually. Looks like it anyway. Looks like it's going to continue on to the long side. Zed, yeah, hello, I'm a member and new to trading. I just wanted to say you give some great advice. Yep, absolute pleasure. Thank you for commenting there. And I'm really appreciate you guys. I appreciate your wonderful comments. Thank you. I do feel good about it. Keeps me going, by the way. Yeah, Stephen, you also like, are you also with them? You're also liking them. Yeah, it's good. I must say, they don't give you too much uphill. So I think as long as you kind of don't break the rules big time, they're okay. You're not going to have problems or whatever the case. And it's a way to, it's a means to an end for many. You know, a lot of people are negative about funded markets, and I got to say, for a lot of people, it's a means to an end. So, you know, I'm not negative about it in any way, and I'm not going to diss anybody or bring anybody down. But there are one or two out there that have been giving problems, and you just got to look out for them. They get called out, and at the end of the day, everyone will know that they are there. So this US dollar, Japanese yen, still going long. Yeah, you know, Lola, I was also long on the S&P 500. And like I say, I got stopped out. But I was actually thinking of going long again, but I'm just waiting for a bit of a better opportunity. I want to see what's going to happen. I might actually wait for it to break out of the flag, to be quite honest with you, because the last trade clearly didn't go well. Wiped me out, actually. And it was actually quite annoying, to be honest with you, because I was hoping to build a nice, strong trade to the upside towards the 6,000. So that taking me out was actually quite an annoying one. I wanted to make that trade bigger and bigger and bigger and bigger as I went along. Was unable to get to that. So, and the euro US dollar short is just not happening for me today. It's just not going. It's just sitting at this one level, you know. It was either take me out or go short now and then stop messing around. I really get annoyed when it does that too. Okay, the euro Japanese yen, that also took money from us, unfortunately. I'm still calling Aussie dollar, US dollar short, but there's not much room left for it. So the risk to reward's not that great here. I'm kind of thinking that it might just sort of end its run to the downside somewhere here. So just be careful of that. The New Zealand dollar is in a similar predicament. Okay, here we go. Yep, has the same pattern on all the currencies. I'm waiting for my EJ long to get hit on the pullback to the support. Yeah. The free market system takes care of the fools out there scamming. You're so right, Daniel. That's actually true. Um, You know, I believe that the BRICS currency was initially designed for not for to actually provide notes, but to provide a currency for the BRICS to trade between themselves as countries. It wasn't meant for us, the people. It was meant for the initial idea was it was meant for the people. It was meant for the countries to trade with each other. So they would have a BRICS currency, obviously digital, that they would trade between themselves. So the mere fact that they want it to now be something else is interesting. It's interesting at best. You know, you know, it's a bit strange to be coming up with something now, a currency now, when the world is moving to something else, because I'm a firm believer that the world is going to think out of the box and change the monetary system completely somewhere down the line, because the monetary system that we have is unfortunately failing. And you just have to look around the entire world. Every single country in the world is bankrupt. Every single country in the world is bankrupt. Now, that doesn't mean anything because the countries print money, and every country just the money flow in the country. I don't know if you realize, but effectively in any country that you live in, you actually they don't need to tax people. People don't need to be taxed because the money that's in the country can be used for whatever they need to use it for. The economy doesn't base itself on taxation. That's unnecessary. So at the end of the day, a country's value is based on how the money flows in and out of the system. So it's so difficult to explain it to you, but it's not about the actual inflation. It's not about the actual loans and things like that. It's about how the money moves around within in the country and how they use it to spend and all the rest of it. But if you look around the world, the entire world is actually bankrupt, and they are going to have to think out of the box and come up with a completely new monetary system of some sort, whatever it is, whether it's digital, whether it's real, whatever. So for the BRICS to now be coming out with a new fandangled currency, just it defeats the object. Actually, it doesn't make sense. It for me, it's interesting to see, and I don't know, will it work? I think it's too late for something like that. Um, I think he's just trying to be funny with the US dollar, to be honest with you. Just trying to like throw the US dollar a finger or something. How's it, Jim? Welcome, man. Um, yeah, I do hate the news. Yeah, but yeah, maybe it'll make the pair move either way, and we'll see. But yeah, like I've said so many times that I used to hang my hat on the news, and I used to wait for the news items, and then I realized that the news drives me insane because you just don't know where you're going with it. It just shoots this way and that way, and it moves things around, and then everything settles back to where it was in the first place. So I've stopped hanging my hat on the news years ago and gave up on it, to be perfectly honest with you. And you know, you sit there waiting for the jobs figures, waiting for the jobs figures, waiting for the jobs figures, and they're the same every week because they manipulate them anyway. And and then it's like a 0.2% higher than it should be, and everybody crashes, and the market goes to the moon or whatever. It's absolutely nuts. It will drive you insane. If you can, try and trade what you see, because the news will drive you insane. Yeah, I hear you with the smaller lots. What I was saying earlier is you mentioned that you can contact trade 10 instruments at the same time, proper count. Why don't you just use smaller lots? How small can you go? There are certain instruments where you cannot go that small, and that's the issue. You've got to know this. You know, when you're risking 1% of an account, that's maybe 25K, you can get trades, but there's only, I mean, 0.01 is about as low as you can go, and on most of these trades. And then if you've got a 10K or a 5K prop firm account or something like that, or even this, and you want to take 10 trades, your trades are going to be minute if you can take them. A lot of them won't allow you, will just be too small. They'll say, no, the trade's too small. They won't allow you to break it up that small. So that's what it makes it. So I'm trying to keep it at the general 1% rule, so that, because that's realistic. 1% is realistic. When you start going below that, it starts becoming unrealistic. It starts becoming difficult to find trades or get trade bits, because, you know, remember, you're looking for stop loss. You don't want your stop loss to be on top of the cost price. So you want your stop loss to be a little bit out. So then you've got to make your trade smaller, and then you can't take the trade because it's just too small. So no, I hear you, make the trade smaller, but it's difficult. It is difficult to do that. You need slaves to work. Rob, I'm finding myself seeing so many support and resistance. Any advice? I'm over trading for sure. Okay. The one thing I can say to you, Jed, is do yourself a favor and don't draw too many support and resistances on one chart. So what I find is best is, I mean, I did it here with Brent. I put too many lines on this chart, clearly. But I know what I'm doing here, and I know why I did it. I did it mainly because I wanted my main resistance, my main support, and I wanted this supply area in there, just above the FVG. It just gave me a very good idea of what's going on. And then you go and make a trade, and it puts a whole bunch of lines in. It makes it even worse. And then I add another line in here because I'm looking at the 4-hour chart. But what I find is best, for example, if you go to this euro US dollar, too many lines on the chart. But it's okay to have a main resistance, a main support, and maybe one through the middle, just to give you a bit of an idea. This line I literally drew in because I saw the heavy fall, and I was just looking for where that confluence is there on the main trend support that it's broken through, just to see if there is an area here where this could turn around and go short. And unfortunately, it's gone long on me at the moment, but we shall see what happens and see if it breaks through there. But I find best is, if you can, for example, here on the gold, put as few lines as you possibly can. So there's your trend resistance, trend support, maybe a bit of a flag pattern that it's broken out of, maybe a demand area here, tops, you know, and then keep it clean. If you start putting too many levels in all the way up here, then you start confusing yourself. And if you start putting too many indicators on, like moving averages and volumes and RSIs and you name it, then one starts to tell you to go up and the other one starts to tell you to go down. Take them all away. And when that happens to you, one of the best things you can actually do to yourself is remove drawings, and just do that. Okay? Just do that and just look at the chart and just sit back and just look at the chart. Say, what do I see here? And now all your support and resistances are gone. All your moving averages are gone. Everything that you had on there, all your trend lines, whatever you had on there is gone. Now you've just got a bare chart. Now look at this and say to yourself, where's this going? And you'll be surprised how the picture sort of suddenly changes in your mind. You suddenly look at this and think, why did I have all those lines on here? Because look at this, it's going and it's in structure, and it's going and it's in structure up here, and this is going long. Now what I see here, which is already a big change as to what we had, is in the gold, look at that demand area that's developed itself there, and that's all you need. Suddenly, that's all you need. So you see, if you just sort of change perspective on a chart, you suddenly change everything. You take all the lines off and you suddenly change the whole perspective on that particular trade at any one time. So just do that for yourself and it will clear things up for you 9 times out of 10. What does it mean on fundamental markets? Consistency source, simulated funding 20%. What you've got to look at is the consistency. They have a formula to work out your consistency on your trading. So if one day you're trading on the 1% risk and the next day you're trying to trade with a 10% risk, and the next day you're trading with a 5% risk, and on one product you're taking a $5,000 stop loss and the other product you're taking a $200 stop loss, it'll pick that up, and it'll pick up that you're inconsistent. It also picks up like if you lose $500 on one trade and 1,000 on another, and you win 10,000 on that one, it's inconsistent. And if you're an inconsistent trader, it means you're risky. That's what they mean by that. Roger, how's it, man? Please link your supply and demand videos. Really enjoying the channel. You know, Roger, funnily enough, I got a comment a while back where somebody said to me, man, all your videos are the same. Which basically meant that I'm going over and over on the same system, which I'm trying to show you guys to use, which is price action and support and resistance. So actually, Roger, if you go through most of the videos, I think you'll find that most of them will tell you about support and resistance. And that's basically what I harp on about most of the time. So I think you'll find most of the videos will show you and a little bit different. Each one, I tried to make them a little bit more interesting and different to each other from time to time so that you guys don't get too bored. But by the same token, I think if you go back and have a look, you'll see that quite a lot of the videos do go over the support and resistance on quite a regular basis. So you'll find most of those there, and you'll find most of the information there. It also, the stop losses, the invalidation rules, the lot sizes, it's all there. So look, in the last week, I did do a little bit more on invalidation. I did do a little bit more on lot sizes, based on the fact that I had a few questions about that and what some people wanted to know. But most of the videos before that, very much on support and resistance, and how you trade and how we get our support and resistance lines and all that sort of thing. And I keep on reiterating that for you guys so that you can absorb it and it becomes easier for you. But at the end of the day, you guys all know that it's not about the squiggly lines. At the end of the day, this is just your edge. This is just the way for you to work out where your stop loss needs to be and how big your trade needs to be. But at the end of the day, even if you had no lines on the chart, it's all about how you approach the trade. So in other words, how you manage your risk, how you put your stop losses in. So trading, for example, one risk on every trade. So in other words, $1,000 on every single trade. Keep the risk the same and try and make $2,000 on every single trade. Try and make a bigger profit because the market's a 50-50 game. And that's the basis of our psychology and our business plan. Our business plan is, simply to make more on our wins and lose less on our losses, but keep the losses constant. Don't make the losses more. In other words, don't think because you're good at the US 500, you're going to trade more on the US 500, and you're bad at trading the DAX, so you're going to trade less on the DAX, because that's just going to mess your system up. If you trade the DAX and the US 500, trade them with the same amount of risk. Keep the risk the same. That way, if you lose the same. If you win more. And that's as simple as it gets at the end of the day. That's the basis of the thing. But yes, Roger, if you go back sorry, Roger, I'm taking liberties calling you Roger there. But if you want to see the supply and demand videos, I've got quite a few back in the series. Just go back in the series, you'll find them there for sure. You'll see on the funded trader account 1 to 100, 1 to 10. It depends on your broker what they offer on any given day on any given product. Most of the leverage is 10 to 1. So I don't think many will offer you much more than that. but it does depend. I know AvaTrade, AvaTrade, they got some heavy leverages. I actually got a shock. I traded with them, and I took a couple of contracts, and it was like huge. I was a bit shocked. I was like, wow, that's amazing. The leverage was massive, absolutely massive, and I almost took an account out there. Okay, so yeah, no, just don't put too much on there. And like I say, look at this. Now you've got a nice clean chart. We had a lot on here. Now you've got a nice clean chart. It just gives you a clean look, and you get a clean look at what's going on. Yeah, you see, there's Daniel. They're all great videos. Great to hear it over and over, burn into the mind. So like I say, like Daniel says, I keep going over and over the same thing as much as possible. And I mean, those guys that think I'm just repeating myself, and if it's boring for them, then maybe shouldn't be watching, eh? You know, do you take trades on support and resistance breaks, or do you wait for a retest? Now, it's very, I don't have specific rules on this, okay? But what I will do is, if I have a support and resistance, for example, on this Brent, I will take a trade based on the fact that it's hit the resistance level. And for me, it's gone into a fair value. For me, it could be even going to the supply level. And then I'll take the trade based on that, and I'll take the trade actually early. But what you should be doing is waiting for a green bar to close and come out of the support and then take your long trade, or a red bar to close and off your resistance and then take the trade short. That's what you should be doing. And but very often I will actually, if it just hits the resistance or hits the support, I will go the other way depending on what it looks like, generally on trend. But on major supports like this and major resistances, there I will wait for the green bar to come out and then I'll take a trade. I don't always wait for the retest, because for example with this trade here, had you wanted to take a long here and been waiting for the retest, you would have waited for the retest all the way up to here. It's a long way to wait. So I would prefer it comes out, it closes, take the trade and go. And vice versa as well. It comes down, it gives you a red candle, take the trade and go. Because you would have waited for a retest all the way to there. A long way to wait. So I do believe in retest, but that's normally with a break in retest, not a turnaround. So for example, if there's the US 500, for example here, you get a breakthrough, you get a slight retest, and off she goes. But the retest really doesn't matter, because you know, if it comes down to this level, gives you a green bar, you can basically go for it. There are occasions where I will wait for a retest. For example, on the Euro JPY, here I will wait for the retest, simply because how strong is that breakout? How strong is this? Because this hit resistance 4 times and came back. So if this retest works out, you've got a good long trade coming out of here. In fact, this is actually quite a decent long trade coming out of there. So a break and retest is valid. It's a good time to wait for a retest. But if it's just hitting resistance, for example, like here, then I just wait for the red candle and take the short, for example, which is what I did here. And then it stopped me out and it broke through the other way. Because the more times that it hits, the more chance it's got of actually going the other way or going through. Hope that answers your question. But yes, I do look out for break and retests. Not always though. Okay. Jed, you can ask as many questions as you want. I'm here. Rob, sorry, me again. Would you say less trades with bigger points loss win, or more trades with smaller loss win? You know, it really is much of a muchness that you can take 1,000,000 trades with small loss, you can take 3 trades with big wins. At the end of the day, what you want to be waiting for in the market is those big wins, because you're going to get lots of little losses. And it's going to be frustrating, man. So frustrating. You take loss after loss after loss, and it's little losses, little losses, little losses. And it's kind of like you're sitting there going, this market is designed against me. It knows what I'm doing, and it's trying to take me out. And all these little things will go through your mind. But at the end of the day, what you're waiting for are those big wins. Those big wins don't come every single time. You'll have a 60-40 win ratio, a 50-50 win ratio, but that win ratio is irrelevant, because the win ratio will come from you moving your stop loss a few times, taking a few profits early, taking a few losses, and so on. So, for example, an account like this, there'll be a few $500 profits, a few $200 profits, a few break evens, a few losses of $2,000, and so on. And you'll look at the account at the end, and it'll either be in a bit of a loss or be in a bit of a win. No big deal. A bit like this funded trader account. It's been ticking along, but it's been taking a few losses and wins, and it's sitting a bit in arrears at the moment. But no big deal, because what you're waiting for is that trade to come along where it goes in your favor and it heads for the big win. And you can start putting your stop loss behind the big win, and the big win keeps on going. And for example, if you're taking this euro US dollar short here, just that as an example, which unfortunately we didn't, but had we done so, then we would have been short here. And this would have been a big win. For example, you would have had win after win after win after win after win, because you would have trailed your stop loss all the way down on this one. And this is one of those trades that would have been a big win for you had you been short on this particular trade. So that's what I'm using as an example. But you'll get a couple of these trades in amongst your trading. And those are what's going to change your account. Because can you imagine you're losing $1,000 here, winning $500 there, and now you're looking at your account and you're $1,500 down, it's in the red, and you're feeling despondent, and you get that one trade that makes you $10,000, just like that. Boom. Suddenly your account's $8,000 in profit. And you're looking at it thinking, how did that happen? That's how it happens. You're waiting for those trades, and they come. Believe me, they do. They come on a regular basis, just not as often as you like, because they don't come on a 50-50 basis. Your win rate of 50-50 is very much based on all the mishmash along the way. You're going to have a lot of mishmash along the way. But at the end of the day, there'll be a couple of those trades that will make you a lot of money. So when you say a lot of small wins and a few big wins, what we're looking at is, I'd say, if you make it's difficult to say, would you rather have lots of small trades than lots of big trades? But what I will say is, you're going to make your money out of the few trades that make you a big win. Okay? You're not going to make your money out of all the little mishmash trades. Little mishmash trades will keep you alive. They'll keep your account alive. They'll keep you from getting your account closed. They'll keep you from losing the account. They'll keep you from going bankrupt. And you'll sort of be break even. And to be a break even trader is amazing on its own, especially if you're starting out. But at the end of the day, you want one or two of those big trades to make you the profit. And that's where the profit comes from. And that's why I said to you guys before, don't try making a monthly target or a monthly profit. You want an overall annual profit, because you're going to make your money over a bigger period, over the macro period, over a year. And that's why I say funded trader accounts are tricky, because the guys that get into them are very often chasing money now. And that's the difficulty. You can't chase money now. You've got to look at the picture and try and make money over a longer period. There are very few people that can trade on 5-minute charts and be profitable. In fact, only 1%. And even then, it's got nothing to do with the charts. It's got to do with the psychology behind it as well. It's exactly the same psychology that we put here, only they're thinking about it in a much quicker way and a much higher risk. So, And are you able to take that kind of risk? Is your heart able to take that kind of risk? Because it can be quite stressful playing in those fields. So yeah. Yeah, now look, that's the thing, Jed. I had a run of losses this week as well. Yesterday, I mean, it really hurt the funded trader account. It really hurt it. Look, it's a 25K account. It's all the way down. The US 500 hurt us, and the US Japanese yen hurt us, and took like $500 off the table just like that on this account. And then the day before that, we had a loss on something as well, and we took a couple of grand loss on the main account as well. It's been one of those weeks, but like I say, the losses are small. And as long as you keep the losses small and you understand that you're going to lose from time to time and you're going to have bad weeks, bad days, etc., then you'll be okay, because the big win will come along, and that's what we're waiting for. I see the US 500 is coming back. So that might be, I don't mean for the guys that are long, sorry, but pretty good news actually, because I'm looking for a trade there. We'll see. There you go. Daniel said it in a nutshell. Wait for the trades to come to you. Do not chase the trades. It'll turn on you and it will bite you. And that is, without a doubt, what will happen. But also, when you see a loss, take the loss, walk away, take a new trade, move on. How did you get into trading futures, currencies, commodities? It seems intimidating. Blake, welcome. And, well, I've been in this game for a really, 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 really long time. So what actually, when we started out, we didn't have computers. We didn't have all these fancy gadgets, and life was slow. Like I always tell you in the live shows, that when we started out, I used to buy the paper in the morning, I used to buy the paper in the evening, and I would buy shares based on the price. And it was like investing nowadays, okay? That was our trading. It was like exciting, I'd see the price in the morning, see the price the next day, so on and so on. And that's how we traded. And then computers came along and all this fancy stuff came along. And to be honest with you, Blake, because I knew the markets so well, and because I'd always dreamed of having something like that, I was one of those guys who just couldn't resist. I got into it. And unfortunately, a bit like riding a motorbike, it's addictive. And yeah, I can say I got addicted to it. And I started enjoying it incredibly. It's a bit like this YouTube journey I'm on. I thought I'd make 1 or 2 videos, and I'm starting to enjoy it. It's fun. So, you get into things that you like to do. And it's like I taught my kids, live your best life and do the things that you love. Do the things that you enjoy doing. And I love trading and I enjoy doing it. So that's why I got involved in it. It's not, what you've got to understand is it's not about the money. If you're chasing the money, it's going to hurt you. It's going to hurt your feelings and you're going to feel beaten up. If it's not about the money, if you just enjoy doing it, you're just having fun doing it, and you just want to live your best life, and you just don't want to work for a boss, for example, and it's something you really like doing, then it's a different world. If you're not just trying to make $1 million quickly, if you're not just trying to get the money to drop out the sky into your lap, or you're trying to play the lotto or something, this is not a cash cow. This is a living. It's a trade. You've got to learn how to do it. You've got to learn how to work with it around you. You've got to get your mind around it. You've got to get your psychology around it. But if you enjoy doing it, it's probably one of the nicer things you can do. It's also like everything else in life. Live your best life and do what you love doing. That's important. That is so important. So that's how I got into trading futures. And obviously, I knew the brokers and a couple of guys in the game. And when they started offering contracts for difference in futures and that sort of thing, it was the obvious thing to try and get into. And When we started out with this, you must understand one thing. All the information that's available to you guys now, that's out there now telling you don't do this and don't do that, was not there. We got into this pretty much blind. I mean, we thought we could like take the markets on blind and just trade the way we always did. And we got through it. So it just goes to show you that the squiggly lines are meaningless, that all the systems on there are meaningless. It's all basically just the psychology behind how you take the trades and how you position the trades. You can use the system to give you an edge, to let you know how to place your stop loss, how to make a profit. Further than that, it's up to you how you run your business plan and how you can make a profit at the end of the day. Do you prefer placing orders or entering manually? I'm starting to like orders more because it keeps me from chasing trades. Now, Stephen, at the end of the day, my personal preference is I prefer to take a market order because things change in the market. Okay, but sometimes if I'm not going to be around, or if I just feel like there's a definite order coming into place there, I will place an order, a limit order, and I'll go away and I'll leave it. And if it takes the order, great. But the thing is, if for example, a price is shooting down on a big wrong red bar and it takes your order here and it goes up, that's great. If it's a buy order and you think, wow, that worked out. But if it keeps on going down, it's a bit of a disaster. So I do prefer to like look at the markets and see what's happening for myself, have a feel, and take a market order. But I will place orders. I will leave a placed order if I feel that there is an order to be taken and I'm not going to be available to take it. I will leave a placed order. But if I'm available to take it, I'll be around and I'll take the order. I'd rather put an alert in, and if it alerts me that it's hit that price, then I'll go and take the market order. So I'm more lean towards market orders. I'd say about 80-90% of my orders will be market orders, not limit orders. Got my reasons. It's just more comfortable for me because I like to feel my way around the market. I like to feel it. I like to see it. If I look at candles, and that's why I keep them green and red as well. I don't have a psychological problem with green and red because I can see clearly where all the sellers are. I can see clearly where all the buyers are. I can see where all the tails are. I can see what's happening in the market. It gives me a picture. A long red bar says to me, do you really want to, you know, and then you see the tail and you think, okay, it's a good buy. We can take the buy. I might get in late often. I'll get in late because of that. But that's not the end of the world either. It's also fair. You see, there was a news event and I noticed on the funded account that it went all the way down and it's come all the way back again. As I said to you, news events, they'll freak you out because you'll see that going down and you'll think, oh, no, I've got to get out, got to sell everything, oh, I've got to dump everything. Everything normally settles back to where it was in the first place. Where would you enter and place stop losses on a 500 sell? Are you referring to the US 500 sell? To be honest with you, Jed, I wouldn't sell it at all. I won't sell this right now. I'll buy it. I will buy this. This is a buy. And the reason I say that is it's not a sell until it goes below these lows over here. If it drops below these lows, then I'll start looking at sell orders. Then I'll start saying, okay, I'll look at a sell order when it's down here with a stop loss up above the last high, or an invalidation up above the last high. But for the time being, this is a long trade. I would actually rather take a long trade here and put my invalidation down below the last lows with a view to it going up to around 6,000. That's the way I see the US 500 at the moment. Taking a short on this, let me just show you something here. I don't want to scare you, but just look at that. Just look at that picture. Just I don't want to take these out of here, but if you take all these pictures away, just look at this. Look at what it's done. Okay. Does this picture look similar to this picture in any way? Just by the way. So just be very careful of thinking it's expensive or supermarket mentality, as I always say. There's no such thing. If it's expensive, it's good. So the markets are strong at the moment, very strong. So be very careful of taking a short on this. I will look at this as a long trade, and you could even take it from this point, but your stop loss is going to have to be down here. I was hoping for it to get a little bit closer and even come down and test this area again, getting us a nice long trade out of here, because then it'll pay me back for what it did to me yesterday. But further than that, short, I'd have to put my stop loss above the highs, and then it probably is going to go there, and my take profit down here. So no, I wouldn't take it short. How often do you add to your trades, and you do it on a video? I don't add that often. I'll only add to a trade if it's really valid. I'd like to show you how to add to a trade, but it's not a necessity. You only really add to a trade when it's really valid. So for example, this would be a good trade to add to. In this trade, I would have followed the stop loss down, but I would have added to the trade in this area here. So just for, just so you know, that if it's got this far, I would have added to the trade. I would have doubled the trade at that point, because it would have been a fantastic trade. So that's how you add to your trades. But there's no need to keep on adding to the trade. If you take, for example, if you take a very light trade, so if you get into the trade, let's say you got into this Brent and you took a very small trade. You didn't take the full trade. Let's say you took half the trade with a $500 loss, which you shouldn't be doing. But let's say you did that. Then at this point, I'd already be adding to the trade and making it a full trade and carrying on with it. But if it's a full trade, I'll normally leave the full trade. I'll bring my stop loss up to cost, and I'll follow it up until almost take profit. And then somewhere down here, I'll actually start adding to the trade, because then I know we're making loads and loads and loads of money. So that's when I'll add to the trades. Daily high and daily low trading, that is for very short term or short time frames. It's how can I put this without swearing? People have created a mindset of a sweep in the market, of a high and a low. If it goes above the high, you can take the long or the short, and it's just a way of working out how they can manage their risk and how they can take their trades. The same way that we've worked out with this system, how we can manage our risk and take our trades. And that's all it's about at the end of the day. What I will use a high and a low for is for my stop loss. I'll put my stop loss before the last highs, or just beyond the last highs, because if it goes past that, it's breaking through, and beyond the last lows, if it goes beyond that, it's breaking down. If you do see that, if it goes past the high, there's probably a good chance you can take a long trade. But like I say, a lot of people have created a mindset of that's when they take their trade. So yeah, on the lower time frames, it most probably works. I'm a little delayed. That makes sense on orders. I've never had that happen to me before, but I definitely don't want a momentum candle opening my order and knocking me out. Well, yeah, that's what I'm saying, Stephen, is it's happened to me plenty of times in the past where I've left an order in place and the momentum takes out your order, and then it takes out your stop loss at the same time. That's kind of one of the worst trades ever, because you didn't even see the trade. It just took your money effectively. That does happen. And that's why I prefer market orders if I can help it. But you can put orders in place if you've got your eye on it. It's not a problem. Anyway, guys, I'm going to go now. It's time for me to move on. Time for me to hit the road and take the evening off. So Brent crude oil has gone back into profit. Euro US dollar is still in a loss. It's not being happy at all. It's not doing anything for us. So we'll just have to see how it goes for the rest of the evening and the rest of the day. The US 500 is looking like a decent long trade. I'm just waiting for a better entry, but we'll have a look in the morning at the trade of the day. And of course, the DAX looks like a reasonable long trade as well. The Nikkei seems to be recovering and bouncing off its trend support, so keep an eye on that. And the SA40 is also looking like a reasonable long, but for now, keep an eye on this US 500. And now it's just going through the news that's really irrelevant at the end of the day, house sales and all that kind of stuff. So, guys, I'm going to hit the road, and I shall see you on the next live show, which will be on Tuesday, I guess. So come back and watch tomorrow's marvelous video. And the weekend, I'll do a rundown on the markets for you guys again. I still do that video. It's not as popular as the other videos, but I'll still do it anyway, so that you guys can get the rundown for the week and the week that was and the week that will be and so on. And then, of course, next week we'll have the Monday video and we'll be live again. So hope you guys enjoyed the stream, and good luck to you all. I hope your trading goes fantastic. I hope you make loads of money and it all works out for you this week. Don't forget, be careful holding your trades over the weekend this weekend. And it's just that sort of the geopolitics at the moment are a little bit nerve-wracking. There's the elections going on, there's things happening in the Middle East, and there's just too much happening at the moment. So just be very, very, very careful of those geopolitics, particularly if you've got long trades on the indexes and things like that, because the weekend can hurt you immensely. So be careful of that. Watch out for that. So if you can, try and get out of your trades on Friday afternoons and come back on Monday mornings, because it's not a quiet period in the world. It's a busy period. Things are happening. Things are going on. And I mean, even Daniel mentioned earlier, what do you think of the BRICS currency? Just so much going on at the moment that can hurt the markets. Okay, guys. So thanks a lot for watching. Thanks for being with me. I hope you enjoyed the stream. I hope it was great. And we'll have another stream soon. Till next time, all the best. Ciao. Thanks. Bye.